Good day, all. Ira Epstein of Linn Associates with your SPDR ETF wrap-up. And this is for Tuesday, and we are now at the 15th of September. It's hard to believe we're already there. You realize we're 3 months away from I'll be talking about Christmas soon. But it's September 15th, 2020, about 6:35 p.m. So as we look at the market, most of the screen behind me still in the green. That's a good thing, right? Foreign currencies mixed today. The metals, pretty much a mixed picture there. Stock indices, now you've got to start watching, if you don't, the December futures, not the September. The roll, I think it completes itself right around the corner here, but all of the daily volume, I wish I could say all correctly, the majority of the daily volume is taking place in the Ds. There's still September trading, but it's almost 3 or 4 to 1 as I just looked at it, December versus September. So be sure you do that. When we look at the tech sector, we've had a bounce in the market. Seems to be caught between this high, this low in the short term. And the market just sort of stuck here. Hasn't been able to get down yet to fill this gap at 110.47. That would be the number that would fill the gap. You haven't been able to get down there. You got into the 111s, but nowhere near filling that one. The market negates the current downtrend if it clears 118.24. Now the chart setup is such it wouldn't turn it bullish. You've got a lower low, and if you took that out, you'd have a higher high. As of this minute, the bears are in control of the market till that's taken out. Where's the resistance? Slightly above the market at 119.02. So if the market wants to go back to what I call that line in the sand, the 18-day average of closes, to do so, it's got to negate this downtrend. Don't know if it'll do it or not. You have the FOMC meeting tomorrow at 1 o'clock and then the press conference at 1:30. The algorithm traders will take over the market on the release of the statement, and then it will watch question by question at the very beginning as to what Mr. Powell says, and you'll see the markets move on that. A very rough day to trade if you're trying to grab hold of it after the fact. In the chart with the Bollinger Bands, we haven't, since we broke down from the upper band, we haven't been able to get weak enough to get to a lower band, but we're still in a downtrend, but we are very oversold. And as I said yesterday, oversold conditions typically don't attract new short sellers. If you're watching and you use filters in your program, one of the filters is going to say, oversold, why are you pressing on that trade? In SMH, you now have a pattern of higher lows, higher highs, and with the settlement at 173.37, the chart actually turned on the bull streak news right at the close of the day, and momentum joined in. It's all systems go unless you get back under 164.47. Target, if the market wanted to go on up here from things, could be the upper Bollinger Band, 181.57. But remember, you can't afford to take out that low again. In XLI, the market is still looking bullish. I mentioned this yesterday. It hasn't even pulled back. I don't know if it's got the strength to get up to the upper Bollinger Band, but there's nothing here to stop it. Momentum is pointing up, the trend is up, and the bias is up. Logical resistance, 79.66, upper Bollinger Band. By the way, support back at 77.78, and until you take out 76.33, the bulls control the market. The energy sector on bounces, as I said, when you have an embedded reading, it's like a dead cat bounce. In other words, it's no energy on it. And that is still what you're seeing in this market. Hurricanes don't move it. Nothing's moving it. You need less supply to move the market and an increase of demand. That's the combination this is going to take. In QQQ, it is still in the chart action, bearish on the chart, bearish on the bias, not so in slow stochastics. They're oversold. They're not even trying to say that both numbers want to go under 20 at this point. So oversold conditions either embed to correct them, or they correct them by getting a rally. Be careful here with the FOMC announcement. Emerging markets not pulling back at this point. They turned bullish, as I said yesterday, right through here. That's where I saw the buy signals coming in. I see that the market's got momentum up, the bias is up, the trend is up. Target could be the upper Bollinger Band. Seems that you're trying to get up to that number right now. GLD, I'm not seeing anything. In fact, The one thing I'm seeing on the chart action is the Bollinger Bands keep contracting. They keep getting closer and closer together. So it's a market that's waiting for a stimulant to get it going one way or the other. Today's rally in the marketplace did not take out the 184.68. Should it just break down from here back under 182.01, you throw out a new sell signal. Maybe you can get down to the 180.14 level, but I think you're more or less caught in these narrow Bollinger Bands, and I'd go, whoa, why get involved? The gold miners, as I had mentioned yesterday, had thrown out their bull signal. Now, if you go up from here, watch out. The upper Bollinger Band is going to be stiff resistance. You got to it, and it's proving to be that resistance. Overbought as can be. So if gold's going to run, why? It would need something away from the chart action. I don't know what that something is. In TLT, I think you're going to be just sitting here, hunkering down at the 18-day average. I've said this to you all week as the market, actually starting last week I said it, as the market waits on the FOMC to see the next picture they're going to throw us. In the euro, the market is pulled back to the 18-day average. The short-term trend, you got lower highs, but you have higher lows. It is not a trending market at all. It's just sitting here at this point in time. So you put it all together, you try to come up with ideas. And, you know, if you haven't seen our market research, you should. If you're trading, for example, ETFs on any of the stock indices, I think you're going to want to see what we write about the futures, because the futures dictate what your ETF's going to do. It's not the other way around. Most of these ETFs are based on what the futures markets are doing. There are others, the spiders, that break into separate areas, and you get the same thing in other ETFs, but the DIA, the Russell as you're looking at, IWM, and the SPY, you just remember all these as you trade them. You can get this information by going to our website, free offerings, sign up for a couple weeks of our research. It's free. You're not committing. We're not taking a credit card. I think you're going to learn something. By the way, we write about futures. We write about options on futures, what the spreads are saying going forward, and throw a lot of fundamental analysis out. So it's not just chart action. In fact, what we write is more fundamentals. I handle a lot of the charting for you in these different videos. I'm Ira Epstein. You have a good day, and I will talk to you tomorrow.